Okay, so here is where we are. Let me zoom in a little bit. Maybe. Okay. So today we're going to take some notes on resolving credit problems, and then there is a Google form that goes with it. Just a heads up, this is kind of a replacement for Chapter 9. We're summarizing Chapter 9. If you follow along in your book, this is pretty much where it comes from. Tomorrow we are going to review budgets and how to use formulas in Google Sheets. Then you have a different Google form, and then we will start Chapter 10 on Wednesday. Friday, you'll have an attendance question. Your assignments are due by 3 p.m. Friday. Something I do want to say, some of you in the Google Forms and some of the feedback have asked that they not be due until midnight or through the end of the weekend. And if you want to turn them in later Friday or during the weekend, that is fine. But I grade them Monday morning. And if they are not there by Monday morning, they will be late. But if you need to get them in later on Friday, that's fine. I don't like doing that. And I'm not going to change what this says on here because I like them due by Friday at 3 so that you are not giving up your weekend doing this. You're supposed to be doing your schoolwork on Friday, but I know that some of you have jobs and lives and other things happen. So if you turn in the assignments, other than your attendance question, that's due on Friday because that's your attendance. But if you need the weekend to get some of those things done, that's fine by me. But when I grade on Monday, even if I don't grade on Monday, if they're not there, they are late and lose points. But I think that's it. Most of you got your test in on Friday. If you did not do that, please do that. So it's not a 0. And then let's go ahead and start this. Okay. So credit problems and resolutions. You do not need to write down all of these warning signs for your notes. You are welcome to. But warning signs that that debt has become a problem. So if your credit card balances are at or near your credit limit, that's not a good thing. If you're only able to make minimum payments, also not a good thing. If you make late payments, that's also a problem. If you skip some payments to make other payments, if you're deciding, do I pay credit card A or credit card B this month? That's a big problem. If you pay one credit card by shifting the balance to another, that's a problem. So remember we talked about transfer balances, balance transfers. If that's how you pay it, that's not a good idea. If your credit limit gets reduced by the credit card company, that's not good. That's because you've missed a payment or some other reason. And it's not just for a large balance. They like when you have large balances because if you're making your payments, they are making money off of you. If your credit score is falling because you have too much credit, if debt collectors contact you, if you are unable to save or invest because of debt obligation. So that's a problem if it's because of debt. You might not be able to save and invest right away because when you're just getting started in your careers, there's a lot of things you kind of have to do. You have to make sure you're meeting your monthly needs. You're still establishing your budget. But if you can't save money because you're paying $1,000 a month to credit cards, that's when it becomes an issue. Or if you worry about how you are going to pay your bills each month, that is another issue. All right. So again, these are just some of the warning signs from your book that your debt has become a problem. All right. So some definitions for problems that can arise from debt. So credit delinquency is failure to pay debts as required by agreement or by law. So when you get a credit card, you sign that agreement. If you don't pay those, that is credit delinquency. Repossession. is the act of taking an asset used as collateral and selling it to pay the debt. So that's typically going to be for autos. Your car may be repossessed if you quit making payments on it. Again, if you owe the bank money and you stop making payments, they're going to come and tow your car and repossess it, and they will sell it so that they can get that money back. A foreclosure is the legal process of taking possession of the house or property when the borrower does not make monthly mortgage payments as agreed. So if you're talking about your car being taken, that's repossessed. If you're talking about your house being taken, that's called a foreclosure. It's a little bit different in how it happens. Obviously, they can't just come and take your house the way they can a car. So there's a different process where you begin foreclosure and you're given notices to move out, and the bank may then auction the house or do different things with it. All right, so more problems that can arise from debt. So collection agencies. If payments on your account are overdue, your account may be turned over to a collection agency. So if you miss some payments and it's past due, Bank of America or whatever bank may say, here, I'm going to give this to the collection agency, and they have the legal right to represent the creditor to collect the amount owed. So say you owe Bank of America $2,000 and you haven't been paying your payments, they're going to send it to the collection agency, who's then going to try to contact you. They will call you, they will email you. They may call family or friends that are listed kind of as people known to you to try to get a hold of you. You'll get things in the mail. They could say, we're going to take you to court, things like that. Their job is to collect the money that you owe. And it's not just credit card bills. Things like medical bills that don't get paid can also go to collection agencies. A garnishment is a legal process that allows part of an employee's paycheck to be withheld for a payment of a debt. So collection agencies, if they go through the legal process, they take you to court. It could be that your wages are garnished. That's what's said, to where then the judge says, yep, you need to pay $50 every paycheck. So $50 will come straight out of your paycheck and go towards that debt. Again, we're going to try to avoid these problems, but these are problems that can arise from debt. Another one is bankruptcy, which is a legal procedure to relieve a person of excessive debt. Hopefully you never have to file bankruptcy, but it is an option out there that hopefully you will all avoid. So there's a few different types of bankruptcy. Oh, that's not yet. So common reasons for filing bankruptcy is you're out of work and have no unemployment income or savings. You owe back taxes. Your house is going to be foreclosed on. Your wages are being garnished. So say somebody sues you and they say, the judge says, yep, you have to make this payment every month, and it comes straight out of your paycheck. Well, now that's money you are spending other places. Your credit card debt is out of control. You're being sued for money you owe on delinquent bills. So these are some of the common reasons for bankruptcy. Give you guys a minute to copy those ones down. So these are the two different types of personal bankruptcy. So there's Chapter 7 bankruptcy and Chapter 13 bankruptcy. So Chapter 7 is the forfeitures of an individual's assets in exchange for discharge of debt. So a discharge is a court order that pardons the debtor from paying those debts. So the judge will say, yep, you don't have to pay this. Where Chapter 13 is a repayment plan for some of an individual's debt. So we'll compare these a little bit more on the next slide. But again, a repayment plan for some of the debt. Maybe you're not paying all of it, but the judge or courts will help you decide what you are paying. So when it's used, so Chapter 7, your only property is basic things like clothes and furniture. You're left with little or no money after paying monthly expenses, and or you are unable to pay basic monthly expenses. So the reason it's used then is because for Chapter 7, you're giving up your assets. So basically anything you own is taken and sold to pay off some of your debts. And that's why if you only have basic property, it makes the most sense. There are some things that do get exempt. For example, like if you have tools that are expensive, but they are needed for your income, for your job, then the judge won't make you sell those tools. Those things won't have to be given up. But a lot of your debts, again, are discharged there. Whereas Chapter 13, if you have equity in a house or other property that you wish to keep because you don't want to sell your house, if you don't mind selling your house, then you could go Chapter 7 also. Chapter 13 also, if you are able to pay your living expenses with your income and you are unable to make your scheduled debt payments. So what happens in a Chapter 13? Actually, I'll wait till we kind of get over all of this and see. I don't remember what things I typed in here. You guys time to copy this down. So these are when it is used. Or commonly when it's used. And then here are some advantages. So with Chapter 7, most of your secure debts can be totally eliminated. So those credit card bills, things that you owe on, a lot of them just get wiped out. The process is usually efficient with debt becoming eliminated within a few months. It doesn't take very long once you get started. And you can't be contacted by creditors during or after filing. So if you just have all these creditors and collection agencies calling you nonstop and you're thinking about this, once you file for Chapter 7 bankruptcy, they cannot contact you anymore. Where Chapter 13, you get to keep your property while paying your debts. So that's an advantage, even if you do have to get rid of some of those things. No, just kidding. Chapter 13, you're not getting rid of them. So you get to keep them while you're paying off your debt. You usually get it 3 to 5 years to pay off your debt on a schedule. So the judge will say, I think this is what you can afford. You have to pay $700 a month for the next 5 years to pay these creditors this amount of money. And you deal only with bankruptcy trustee, no direct contact with the creditors. So whoever's in charge of that case deals with all of them. You don't have to. And whatever kind of gets agreed on, if that's not part of the 3 to 5 year plan, it just gets erased. So again, in the example I said, the judge says you pay $700 a month. After you do that for 5 years, whatever is not paid off is erased. or discharged. So to be eligible, so for Chapter 7 bankruptcy, you must qualify under an income eligibility test, and you must complete a session with a credit counselor before filing. So you can't just be sitting there and be like, oh man, I'm, really far in credit card debt. I got all these credit cards. I'm just going to file bankruptcy and start over. No, you have to actually qualify. So again, there's an income eligibility test, and you must meet with a credit counselor. And then for Chapter 13, you do not need to know those numbers, like the dollar amounts there. But unsecured debts less than around $395,000, and secured debts must be less than like 1.26 million almost. Secured debts, just to kind of the difference, are things that are backed by collateral, right? Something that they can take if you don't pay, your home loan, your car loan, or if you've put something else on the line. Give me a second here. So again, Chapter 7, remember, all of your stuff is sold to kind of help pay back your debts, where Chapter 13, you get to keep your stuff and make a payment plan. Then there's Chapter 11 bankruptcy that is for businesses. So Chapter 7 and 13 are for individuals. Chapter 11 is for businesses. In rare cases, there are individuals that use Chapter 11, but they must be very, very wealthy. So what Chapter 11 is for businesses, it's a reorganization form of bankruptcy, which allows them to remain open and restructure their debts to pay them over time. So the purpose is to make sure that that business can stay viable, they can make a profit while they are going through bankruptcy. It's not to just shut their doors. So again, it does require a plan because they have to make sure they are able to stay open and that their business is profitable. So bankruptcy might be the best option if your debts are out of control and impossible to pay off, right? Sometimes you look at your income and your debt and that there's no way to make it happen and to still live your life. So other ways to resolve credit problems. So again, hopefully bankruptcy is not an option that you guys have to choose, but there are choices if you do file bankruptcy. Again, medical bills, small business failure, that was not on that other slide. That is another common reason for bankruptcy. So other ways here. So to dispute charges, this is kind of filling in some of the pieces from your book too, is the process of informing a credit company of an error on your bill. So if you open your credit card bill and see that there's something wrong, you can dispute it. Documentation are records that support your claim. A dispute letter, this is an example from your book, is a letter written to inform a credit company of an incorrect charge on your account. So notice the formal heading, dispute on account, it says the account number, please register this dispute of a charge on my recent credit card statement, this date. I have a copy and I circled it here. I called and reported it to this person. This is the charge. I didn't make this. I've never been there. I didn't give my card to anybody else. It's not lost or stolen. Please remove it. So that's a basic dispute letter. So something to keep in mind before you go through disputing charges, or when you're disputing charges and calling, or before you write a letter, it is often best to call. I've never had to write a letter when I've seen something on my account that didn't belong to me. I call, let them know, and they have taken care of it. So I've never gone through this process because, like I said, the few times I've called, if my account's been hacked or something, you know, I still have my card, but somehow they got a hold of it, then you can often get that taken care of with a phone call. Other ways to resolve credit problems are debt consolidation, which is a process of getting one loan with a single monthly payment to pay off all of your loans. So debt consolidation, you have a lot of credit cards or a lot of debt, you can lump sum them into one, maybe getting a better interest rate depending on your credit situation, and then only have to worry about one monthly payment. Even if it's not a better interest rate, sometimes it's easier to only pay one thing instead of 7 or 8. An alternative dispute resolution, an ADR, is how your book refers to it, is a method of settling a dispute using a neutral third party. It's an alternative to a lawsuit. So basically, instead of going to court or suing somebody, you have this neutral third party that kind of sees both sides and tries to facilitate some sort of negotiation. Again, it's trying to avoid the courts. It's all alternative dispute resolution. All right, and then how to protect yourself against credit fraud or scams. So credit card fraud is intentionally using someone else's credit account to steal money or goods. Identity theft, which we've already gone over, I do believe, is using someone else's personal information without his or her permission to commit fraud or other crimes. Phishing is a fraudulent practice of sending emails pretending to be a reputable company to commit credit card fraud or identity theft, which, trying to look at what chapter we went over that in. Yeah, so we went over that way back in chapter 4, but again, they're coming up again, identity theft and phishing here in chapter 9 because they are credit frauds. They can lead to credit problems. A credit repair scam is a company that claims to be able to fix your poor credit and give you a clean history for a price. So companies cannot take what's on your credit report and get rid of them. So if some company calls you and they say, hey, I see you have a crappy credit score, we can fix it, just pay us $50, $200, whatever, and we'll get rid of this stuff. That's not going to happen. The way you fix your credit score is time. You start making your payments on time, so that over time it shows that you have improved. Your debts get paid off over time. So it's going to be free. It's just going to cost you time. So credit repair scams are often not a good idea. Okay, so Consumer protection. So there are people out there to protect you. The Federal Trade Commission. You do not need to necessarily know each of these. Just know that there are companies out there that can protect you. They are the one that the Federal Trade Commission deals with complaints of identity theft. They also oversee the Do Not Call registry. You can look on their webpage. The Consumer Financial Protection Bureau. They provide consumers with information to make good financial decisions. The FBI, which I'm sure we all have heard of. So the FBI does investigate different types of fraud, and that's why they are on here. So internet fraud, bankruptcy fraud, mortgage fraud, other crimes. There are also consumer advocacy groups, which are mostly nonprofit that promote consumer rights. Consumer advocacy is the process of helping consumers resolve problems. That's going to be that definition from your book. You do not need to write down all of those laws or credit rights protected by law. They are all in your book. So the Truth in Lending Act. So the Fair Credit Report Act, I will kind of just summarize each of these, basically says that you have a right to get your credit report from all three creditors once a year, because you have the right to know what's in there. The Truth in Lending Act, they have to let you know about the cost of a credit in the loan agreement. Also, the Truth in Lending Act limits your liability to $50 if your credit card is reported lost or stolen. So say you lose your credit card or someone got a hold of your account information and they charged, $700 worth of stuff. The Truth in Lending Act says that you are at most responsible paying $50. Oftentimes, it hasn't happened to me too many times that my account information is being taken, but and also other people I've talked to, usually the banks just take care of it. They work it out with wherever these charges were, and I've had to pay nothing. But again, you may be held liable up to $50. The Fair Credit Billing Act is for resolving billing disputes. It's basically to help with errors on your account. It says that you have 60 days once you receive something to file a dispute. Then the creditor has their amount of time to say, nope, look, this is fair. The Fair Debt Collection Practice Agencies protects consumers from abusive collection practices. So they can't make threats or false or misleading statements when they contact you to get money. The Equal Credit Opportunity Act basically says no discrimination can happen. Everyone has the right to credit. And the Credit Card Accountability Act just says that they have to have fair practices. It's to limit abusive practices by credit card companies and to give you more protection. So basically, that's the one that says, hey, they have to notify you within 45 days if they are raising your credit. APR, your interest rate, they have to give you at least 3 weeks to make your payment. They can't mail you a bill and say, hey, look, this is due in 3 days. So just other things to help protect you. Again, you don't need to necessarily know any of those names and what one does what. You should just know that you have those rights and there are people out there to advocate for you. Oh, I forgot I put that on a slide. Basically, that's what I just went over. And that is our last slide. I thought the last one was the last slide. All right. So for today, you have a form for resolving credit problems right here. Resolving credit problems question. So this is not due until Friday, but it is basically from what we did today. So you may want to go fill that in while that is fresh in your mind. Any questions? Just a heads up before you guys go.